Good evening, everyone. Thank you for joining our webinar, Stock Comparison Guide tutorial. My name is Carol Fine, and I'm honored to be your host for this exciting session. Tonight, we have the privilege of learning from Suzi Artzberger, Vice President of the Online Tools, Information Technology, and Data at BetterInvesting. Suzi not only leads the team responsible for designing, developing, and continuously enhancing these powerful stock tools, but also actively uses them to manage her own portfolio. Get ready to hear Suzi's expert insights, tips, and strategies as we dive into how the stock comparison guide can empower us to make informed investment decisions and choose the best stocks for our hard-earned money. Suzi.
Thank you, Carol, and thanks everyone in our audience for coming out today and spending some of your valuable time with us. In today's webinar, we're going to be going over the key operations of the Stock Comparison Guide tool, or SCG as we call it. We'll review the app's layout using screenshots, and then we'll go live to the tool for a demo. The primary purpose of tonight's webinar is to give you information on what each part of the SCG does so you can operate it competently. We'll talk a bit about the individual criteria and how they can be used, but not in nauseating detail. At the end of the presentation, however, I have two great reference videos that you can review that will guide you further on how certain people use the specific criteria for their comparisons, which will give you something to, another great reference point. We'll talk about how to start a comparison guide, how to save a comparison guide, and so forth. We'll talk about sharing an SCG and about notes and about printing. So basically, the nuts and bolts of the tool itself. If you have questions as we go along, please submit them using the question panel. Our capable backroom staff will either answer them or leave them for me to answer out loud. We have a lot to cover, so let's get started. Before we formally begin, let's go over our standard disclaimer. You will see some stock ideas as we go through our program. Please consider all of them for demonstration purposes only. Whenever you see a stock in one of our webinars, please research it and ensure you understand what you are investing in before you invest. Securities in the screenshots or the live demo may or may not be currently held in my portfolios. We will make a recording of this, and I am an active investor. At this point, I do not own any of these securities that we'll be covering, but I may in the future. Our presentations may contain images of products or services not endorsed by BetterInvesting, and if those images exist, that doesn't imply they are endorsed by me or BetterInvesting. Our session is being recorded for future use in case you have to leave or want to review it again later. The recording will be posted in the video learning library and available to members after logging in to the BetterInvesting member website. Now, the Stock Comparison Guide is one of the most underutilized tools in our online stock tools suite. We want to show you how to use it so you are comfortable using it and see the value in comparing stocks to buy the best. I use it when I'm making a decision about adding a company to my portfolio. I can't add a lot because I'm not rich and I don't have the time to follow lots and lots of companies, so I want to buy the best to sleep at night. This is the basic view of our tool. And the big takeaway right here is that we are looking at 5 different companies, and you'll see them across the top. And then on the left side, there are a number of different key criteria in rows. So it's very much a table-based approach. It's broken up into 5 sections and logical groupings. And they are at the top, the growth comparisons, the management comparisons, the valuation comparison criteria, the potential return criteria, and other data that might be interesting for you as you look at these companies side by side. We will review nearly every line when we go through the live demo. On the SCG, it requires your judgment. We ask that you look at the data in the row and look at each piece of data for the company and apply judgment to select the best, or maybe the best 2 or 3 companies. Every row does not have to be compared or completed. And you'll see as we go through that not all of them are as important as others. In general, the top 2 sections are very important, and we'll take a look at those, and then we'll work our way down. And it pretty much follows the steps of the stock selection guide. Let's go over how we would typically use the tool. First, you are going to create a stock selection guide, or SSG, in either Core SSG or SSG Plus tool. On that SSG, you'll make your SSG judgments and then save it. Then we'll open the SCG, the stock comparison guide, and create and save a comparison guide for use. So in other words, the data for the SCG comes from your completed studies. And with that, here's a big note for starters. Make sure your SSGs are current. And what that means is we want you in your stock selection guide to update it to have the most recent fundamental financial data or quarterly data, the most recent prices. Then review your judgments to make sure they are still reasonable so that you're all set to compare side by side. Now, the typical usage, or what we'll call the best usage, is comparing companies in the same industry using those completed SSGs. And you do that by highlighting one or more positive numbers to help select the best. Alternatively, I've often used the stock comparison guide and just added companies in the same industry or sector directly to the SCG without completing a full study on them to narrow down an industry list for further study. And the benefit to that, while you don't have judgments, is that you can see some of the fundamental data. You can see the companies stacked up against each other in graphs. And it might be easier to get rid of a company that you shouldn't put your time into studying. And speaking of getting rid of, there's an opposite way or contrarian way of using the stock comparison guide, where you can put your companies on the table and then highlight the negative factors to find companies to remove or companies that aren't worth your time to study any further. So as we get in, and I'll show you the live demo, you'll see how it's just nice to have the information for 5 companies all together so you don't have to flip back and forth. Now, the typical comparison usage is when you're comparing stocks in the same or similar industry. Is this mandatory? No, you can compare any one stock to any other stock. But some of these factors or criteria are usually compared to industry averages or what's typical for the industry, things like pre-tax profit, debt to equity. And so apples to apples is the way to go here. Now, one of the things to consider that when you're doing an apples to apples comparison of companies in the same or similar industries is that the SSGs should be prepared in a similar manner. And what I mean by that is if this happens in a club environment where the workload to prepare the SSG is parsed out amongst 5 different people. And some people might be very conservative in their forecasts, and some people might be more aggressive in their forecasts. So if you can caution people ahead of time to be either, conservative for them, or make the group smaller that is doing the SSG work, so you get the comparisons prepared in a similar manner. Then, once you get ready to go, and I'll show you how you get there in our live demo, but we're going to set up a new comparison. So I'm just getting you familiar with the tool here. This is the table view, the top half of the table view, without any data in it, without any companies to compare. To add a company, we are going to click on this little gray box next to the text box under Pick a Study or Ticker. And then when we do that, we're going to start typing in the ticker to get a list of all of our saved SSG studies for that company. So in this example, I've typed in ADP, and there's my ADP study that shows up, and then I would just click on that. And then that will fill in on that first column. And then the second column over will have a box, another pick study box in it. But I mentioned you could add companies directly from a ticker. So in that case, what you would do is in this text box, you type in the ticker and scroll down a little bit past the study section and look for the ticker, and here it is, ADP, and you would just select that. Now, data-only SSGs are certainly are going to be created, and what that means is an SSG is created behind the scenes, but there is no judgments in it because you haven't put any of your forecasts or judgments in there. And on the SCG, they will be left blank, and there will be actually a double dash where there's missing information. But sometimes that it's perfectly usable like that for your purposes. So again, we'll take a look at that live. The no save studies are actually required. Preferred, but not required. Okay. In our fictional example here, I have done this process of adding an SSG in each of these 5 columns. And so here are my 5 companies. Here's in the column data is the data associated with what's in the header up here. And in the header, there's quite a bit of information itself. At the top, we have the company name, then the SSG study name. That's from the SSG tool, Core SSG or SSG Plus. And we can see here that one of these studies is in red. And if the text is in red in this study name, then that means the price date is more than 7 days old. It's a prompt for you to go into the SSG and update the price at the very least. Now, the study name is underlined. It's actually a live hyperlink, and if you click on it, it will open the SSG, the underlying SSG, in Core or Plus. We also have the size of the company, in this case, medium or large, the industry, which is application software in this case. And then this bottom row has a count. It's actually a tally. And what it does is count up the green highlighted cells in the SCG. So give me a second, we'll talk about what that is. And then there's a refresh button, and it updates the SCG to what is in the underlying SSG. We'll demo that. It does not refresh the company data. It doesn't bring in new fundamental financial data. It doesn't bring in new prices. And then there's a trash can icon. So for example, let's say we wanted to get rid of Paylocity Holding. I would click on this blue trash can icon on the right, and it would just remove it out of the comparison guide, but doesn't delete the study itself. I do want to point out in the upper right-hand corner of the screen, there are some menu items, and one of the things we want to talk about now is the Tools menu item, and you'll see a couple of options. When we want to clear our highlighting, the green highlights that we're going to use, this is where it's located. The tool also offers some default highlighting that we'll cover. And if you want to restore the default highlighting, this is where it's covered. And then the third option is Preferences. We actually have two versions of the tool, SCG Plus and SCG Core. We're going to use SCG Core tonight because it's a more streamlined view. I will show you SCG Plus, however. Concepts are identical. It just has more criteria items. And this Preferences item will set your preferences for all newly created comparison guides. So the basic concept of the comparison guide is that you're going to take a look at the criteria and then decide which one of these is the best, or it could be which two of these are the best. You will click directly in the cell to highlight it in a green highlight, and then you can unhighlight by clicking again. It's just a switch, on and off, green on and off. The tally or count in the header keeps a running tally of the number of cells that are highlighted for each company. Now to save a comparison, which I like to do fairly quickly in my process, it's in the upper left in this gray comparison box, and it is a floppy disk icon that is the standard for save. So we'll click on Save Comparison. And when you do that, you can type in the comparison name you'd like to use. By default, it's the list of all the tickers that are in the comparison with the date. But in this case, I've called it Demo. You can erase everything and call it whatever you want. Click OK, and the new comparison is saved. We can access our saved comparisons again by going up here into the upper left in the gray area where it says comparison. There is a drop-down box. If I click on the drop-down box, then I will see a list of all of the saved comparisons in my account. And if I scroll up to the top, I can create a new comparison. And then there's three options in these blue boxes here. The first one is a trash can. So if I click on a comparison and I want to delete it, I would then click on the trash can and it would be deleted from my account. There's that save button we talked about. And then the last blue button here has got arrows that point away from each other, and it's meant to indicate change. And that's where you can rename the study. If you mouse over it, it says rename the saved comparison. And that's where the drop down is right here. All right, then when we're looking at the graph, when we're looking at the comparison guide, we'll see these little icons here, which are, I forget what somebody called them. They used to look more like books, but now they look more like graphs, and that's exactly what they are. If you click on them, you will see a graph of the data from that line item. So in this case, it's historical sales growth. And then if we click on the first column here, we can turn the lines on and off on the graph. We get to see the graphical data, the table data, and the growth rates, as well as some educational content about what you're meant to think about that data. All right, then let me move on here. One item I'd like to talk about is printing. And there's a couple ways of getting your comparison guide out to others. One is to create a printout of it. And to do that, we go to print, and then it pops up a box. And then you select what you want. There is a notes function here we'll go over live that you can append your notes and generate a PDF, which will be downloaded to your computer. Sharing is another function. It works very much like sharing in the stock selection guide, and we'll go over that live as well. Now, we had to have some companies for our stock comparison guide, and so then they need to be completed. So in order to fully demonstrate that, I've gone ahead and finished some stock selection guide studies. The judgment points in these studies are simply those that I chose after what I did what I call a quick and dirty SSG, and I also compared them with our member sentiment estimates. And so you should consider them samples or demos only. I didn't put tons of research into, how each company makes money, and put the normal research into what I would in a stock selection guide. They are all of these companies are from the large or medium size, from the technology sector and the application software industry. And we have automatic data processing, or ADP, Paycom, ticker PAYC, Paychex, ticker PAYX, Intuit, ticker INTU, and Paylocity, ticker PCTY. These are all companies that work in the human capital management space or in payroll processing. So with that, we're about ready to go live, and because we have our companies all set in the background. But before we move on, Carol, do we have any questions?
We do. Oh, there is one that quickly came up. Why is there no highlighting in the 5-year rows?
There could be highlighting in the 5-year rows if that's what you'd like to do. There is, we'll cover this live, but there is default highlighting that is applied, and it is only applied to the 10-year sales, historical sales growth, or the 10-year earnings per share growth. And we'll talk about that. Generally, you don't need to highlight both the 5-year and 10-year data values. Just pick one or the other. So the automatic calculation uses the 10-year data. Personally, I use the 5-year data more often, but that's why in the automatic highlighting, there's nothing on the 5-year rows. You can add it manually, no problem.
Okay, I think
Anything
that's
else?
it. Nope, that's it. Continue on.
Okay. All right, let's go live to the stock comparison guide. And let me see if I can pull up the right screen. There we go. Here I am at the BetterInvesting member homepage. I am already logged in, which you can tell because my name is up here. And to get to the stock comparison guide, you can click on this SCG block, which stands for Stock Comparison Guide. You could also go up to Online Tools and Stock Comparison Guide as well. We're going to click right here, and then we're going to open up a blank Stock Comparison Guide. And hold on, I've got to get my notes up here. So, blank Stock Comparison Guide. Now, you can see I'm using this in a browser. For those who have not used the Online Stock Tools suite, they're browser-based tools. They work in Chrome, Firefox, Safari, a couple of other browsers. They work for Mac users as well through any of those browsers. Edge, well, not on the Mac, but Edge on Windows. And I do want to point out, when you open the stock comparison guide, you can see a number of icons on the left. These are our tools. There's a home page, a My Studies page, Stock Ideas, Stock Selection Guide, and SCG stands for Stock Comparison Guide. It should be easy to remember because when you're clicked on it, it's green. It says SCG. So I'm going to open a saved comparison guide. It was one from my practice session earlier today. And to do that, I'm going to this gray box with comparison. And then when I click on that, I have an option of new comparison or open something that's already in my account, which is my list here. And here's a practice session that I did, and all of the data pops up, including the highlighting. In contrast, when I go back and click on new comparison, it's blank. So let's start adding and building this like we would if we were starting a completely new comparison. So remember, we're going to click on this little gray box here with the dots in it. One of my first companies is ADP. So I'm going to go to ADP, the one from 317, and bring that in. In my study, when I bring it in, there's no highlighting. Why is that? Because under Tools and Preferences, I do not have automatic highlighting enabled. If I wanted to enable automatic highlighting, everything would be highlighted. And there was that question, why isn't the 5-year highlighted? We'll get to that, but it is not by default. If we want to clear highlighting, I'm going to go to Tools and Clear Highlighting. If I want to go restore the default highlighting, I can click that and the default highlighting will be restored. But I'm going to go to Tools and Preferences and turn off automatic highlighting. Now I can still click in any cell and turn the green on and off. So that still works. The Tools Preference and Preferences are really about the default highlighting. Let's add our second company. I'm going to click, I'm going to type in Intuit. I see it right there. Pick Intuit. Now I'm going to come in and we can see here's all of the data is populated, including my estimates, including my buy, hold, or sell, and the upside downside ratio. What if I picked a ticker like Paychecks and didn't pull in my study, but I pulled in the ticker? Look at that. It pulls in just fine, and there's a lot of data there, but it doesn't have my estimated sales growth rate. It doesn't have my estimated earnings growth rate. It doesn't have, the buy, hold, sell indicator or the upside downside ratio. And there's no return, no reasonable number for return here. The benefit of doing something like this with a data-only SSG is that I can see some of these sales growth rates all stacked up against each other. Also, remember that graph icon? I can click on that graph icon and we can see all of the companies together along with their data. So some people might enjoy just seeing that data all together. We're going to finish our comparison guide using the typical approach though. So I'm going to use this delete button and remove it. And that's simple as that. It just removes it from my grid here. Okay, let's use the study for Paychecks. Whoops, I have a little highlighting there. We're going to use Paycom. Whoops, and then Paylocity, PCTY. And now I have a full grid of data. You might be asking yourself, what is the last column for? We'll get to that when we look at management comparisons. So here we have my 5 completed SSGs brought into the comparison guide. I am going to save my comparison guide right now and click on that save icon. And I'm going to call this for my webinar. Okay, so now we have it saved. Then we have this header information. And let's take a look at what happens if I click on this clickable link for ADP. Watch the top of my screen on the upper left here, and you'll see a new tab appear. And in that new tab is the actual stock selection guide for that exact study for ADP. We can see the forecast for sales was 7 and the forecast for earnings growth rate was 7.5. If I go back to my comparison guide tab, which I can just click on, there's the estimated sales growth rate of 7 and estimated earnings per share growth rate of 7.5. Now let's say I changed my 7 into 7.1, which I can do. If I go back to the comparison guide, it's not updated. That's what this refresh button is for. If I click on the refresh button, then that new number comes in. And now my comparison guide is up to date. We don't have any studies in red here like we did in our screenshot example, but same process would apply. If the ADP link were in red, I could come over here, go to data, refresh my price, go through that process, come back to the study and refresh it. All right, now let's get down to the nuts and bolts of what we're going to do with our comparison. So the process is go down through each one of these rows. Maybe it's a little intimidating at first, so I'm going to cut our view down a little bit. Off to the right here, we see double carrots that are upward facing. And if I click on that, wow, it collapses the whole screen. If I click on the double arrows, it opens the whole screen. So I can collapse the screen, then I can click on the single caret and open one section at a time. So let's take a look at the growth criteria. Now we are listing the historical sales growth over the last 10 years and the historical sales growth over the last 5 years. I'm going to tell you that it's probably only meaningful if you pick your best using either the 10-year or the 5-year. The default method uses 10-year. More often than not, I take a look at the most recent data and look at the 5-year. Also, the default method would only pick the best in the row. And I give myself a little more grace. These sales growth rates of over 20% for a medium or large company are great. So I'm going to give them credit for that and click on 3 of them. You do you. This is completely legit. And when I click on this green box, you're going to see this tally mark or tally count go up. If I unclick it, it goes back down. So it's simply counting everything in this column. And then, so I'm not going to click on the 10-year sales growth rate criteria. Now, it's kind of important what we're forecasting going forward, because I'm going to show you that for these great rates that we saw in the past, I didn't project anything that large. So Intuit is my winner on a large company. I'm projecting to grow at 12% for sales over the next 5 years. That's a winner for me. A medium-sized company growing at 10% is okay. It's good. It's good, no doubt. And so I could click on all these 3, but this is my judgment. I'm just going to click on the best one here. And then we get down and do the same thing for earnings per share growth. So I'm going to look at 5-year and take a look, in fact, that we've had earnings per share growth rates that are very robust out of Paycom and Paylocity. And then my earnings per share growth rate projection is 13.8 for Intuit. Let's open up the next one, management comparisons. So here we have pre-tax profit, and we have some that are lower than others and some that are higher. The pre-tax profit is one of those criteria you really want to compare against industry averages. So in this last column here, we can show industry averages. In which industry? Well, they're all in the software application industry. So I'm going to, and that's the one that's available to me. So I can click on that. That's easy. If I had companies from different industries, I would have many options here. I would have for each industry that I have at the top, I would have a pickable item under select industry here. The blue highlighting here, which showed up as soon as I did this, I can turn off select industry. Now I pick it, and what this means is all of these companies are in the software application industry. Match, match. So let's take a look at pre-tax profit on sales. The industry average for pre-tax profit on sales is 12.4. Wow, we have some that are much higher than that and doing very well. I'm going to select all of those that are doing very well. Given that they're all doing very well, I'm not terribly impressed by 12.8. I guess it's okay. But we have some that are doing much better. If we want to see that on our graph, again, we can click on the graph and clearly see that Paylocity is dragging behind a little bit. Now, return on equity, also called percent earned on equity, this is the last 5-year average. And that brings up another point. This is the average. If we look at the graph, we can see, if some companies are doing better or worse in their last couple of years or so. So for ADP, their last 5-year average is 66.26, but they've had some great return on equity in the last 2 or 3 years. So that's another advantage of using that graph. Now, in general, we're looking for high teens in this, but the industry average is 24.2. So we have two that are clearly, oops, not that one, above the industry average, and I can identify those there. And lastly, and similar, debt to capital. Debt to capital, we're looking for lower is better, theoretically lower than 33%, but it depends on the industry. And in this industry average is 27.5. So I'm impressed with Paycom and Paylocity that they're much lower. I will not point out ADP. I wouldn't highlight that. I wouldn't. You might. It's not terribly different than 33%. Intuit's close, but it's a little bit higher. So here I have, my tallies are going up, and we're going to continue on. But before we do that and we look at valuation, is there anything here that we theoretically want to get rid of? Now's a good time to think about that. Do we want to continue on with companies that don't have great growth or great management criteria before we start thinking about valuation and which is in the buy zone? Now, I'm going to tell you this is a pretty hard comparison. Some of these companies look pretty good. ADP, if we look on the visual analysis, looks pretty up, straight, and parallel. If we look at Intuit, pretty up, straight, and parallel. Paychex, pretty up, straight, and parallel. So this is a very good industry. And if it seems hard, it's because this industry is very close to each other. So let's go back to, but by now you might be thinking, well, I really want more growth than some of these companies can give me, or something like that. Valuation. what is the present price? Does this price tell us what the valuation is? No, not really. It's really just here for reference. I would not highlight this row. But here's a new indicator that's been on the comparison guide for a long time, but is not really in the stock selection guide, and that is the present price divided by the sum of earnings for the next 5 years. So if you're paying $291 a share for ADP, how much earnings are you buying? And the lower the number means the better deal you're getting when you're buying that much earnings. So the automatic highlighting would automatically highlight the best one. And you could highlight the best 3 if you felt like it, or just highlight the best one. Or if it's not making sense to you, don't bother highlighting that row. That's fine. Average PE and current PE. This will tell you, if you compare these numbers together, how far off your current PE is from average. And here we have for Paycom, their average PE is pretty high at 78, and current PE is at 23.4. Same thing here, the Paylocity PE has come down pretty dramatically. So we've got 3 companies with pretty high PEs. Intuit is one where the current PE is a little bit higher than the average PE. Now in this row, you might be looking at how the market values the company, where if the company is enjoying high PEs, the market is in favor of that company at this point. But then you've got some other companies, the ones with lower growth, where maybe they're not getting valued as much by the market. And they are around 27 PE. So it's a pretty pricey industry, as we can see by the industry average. But you could say, well, this one's a little counterintuitive. I actually like the fact that Intuit's been hanging in there. And this data is just a couple days ago. In terms of PE, I'm going to give them a little credit. They're a little high. I have trouble with 102 and 51, so I'm going to leave those alone. Now, present price, maybe I value the fact that these are in the buy zone, and the fact that Paycom has the biggest upside downside ratio. I can select that. And here's where some of those reference webinars that I'm going to send you to can give you another person's viewpoint on how to work the stock comparison guide. You're hearing my viewpoint on my decision on this criteria. Then the potential return. I view this in 2 different ways. Number one, do I value a company that's paying a dividend? I don't value a company that's paying a 0.6% dividend, but maybe above 1. And then, but with the payout of these 2 companies, 60% is pretty high, 79% is really high. So I'm not going to do anything here. Maybe 60% is fine, but I would not highlight 79 as a beneficial factor. And remember, that's what we're highlighting here, as a beneficial factor. And then compound annual return, we've got 16.8 as the highest. So before we get into other comparisons, let's take a moment to look at our tallies. So for me, I'm going to take a closer look at Intuit and Paycom. When we didn't look at what Paycom looks like, this is Paycom on a stock selection guide. Also looks good. And management indicators, this is the one with very little debt, so it looks pretty good. Okay, other comparisons. Not really a lot to highlight down here. This is going to tell us sector and industry, and in this case, everything is the same, technology and software application. You can highlight any of these criteria here. I wouldn't, because other than if you value, let's say you're looking for a medium-sized company in your portfolio over a large, you know, that could be someplace where you would want to use highlighting and tally them up. So that's the stock comparison guide in a nutshell. And the beauty of it is all of the data is sitting there right next to each other. You don't have to go, I'm going to duplicate this tab. You don't have to go from this tab to this tab, looking all over the SSG for the data. It's all right here knitted together for you. All right. Now, I want to talk a little bit about SSG Plus. If we click on the button in the upper right, it'll change, the logo will change to SCG Plus, I'm sorry. And this is only available if you're a Plus Tools subscriber, but if you are, and most people are, you get extra criteria. We have earning stability over 10 years, earning stability over 5 years as extra criteria. The price range over the last, there's a lot more valuation metrics. Price range over the last 5 years, average high PE, current high PE, current low PE, lower middle, the zoning indicators, relative value, and PEG. And again, any place there's a cell, you can turn it on, click it on, or click it off and add to your tally. So there's a lot more. There's total return based on the forecast high PE and return based on forecast average PE or par. And in the bottom section, there are 3 new items. The current diluted shares outstanding in case you want to buy or are considering something a little more highly capitalized than something with less amount of shares. Insider and institutional. BetterInvesting doesn't have official guidelines on either insider or institutional, so you can take that, you know, if you have a personal philosophy about what you want to order, what you want to pay attention to. So a company like Intuit has very little insider ownership. A company like Paylocity has quite a bit, for example. If the company's an ADR and what country the company is domiciled in. If you're studying a bank, the SCG Plus has bank data as well, total assets, return on average assets, and so forth. So that's the difference between core and plus. My preference is to use the core because it's just a cleaner for me, but feel free, and you can switch back and forth. Feel free to go to the plus, SCG Plus, or back to core. Now, let's say you finish this, it's saved, and you want to share it with somebody. There's 2 ways to do that. But before we do, I want to point out that this is all of the database analysis and comparison. There is a big piece that you need to do when you're like in a club environment or yourself, you're doing your research. Things like, what is the market share that each of these companies holds? What are the unique items that set it apart that make up maybe a potential moat? So you can make a note, just like you can in SSG Plus or Core SSG, you can make a note. And to do that, I clicked on Notes up here. Let me start that again. Notes, up in the top right. Then I'm going to click on New Note. You can say market share for each of the companies, ADP. I'm making this up. So you've come across some comparative information someplace else. You can make a note of anything you'd like. You can paste text in here, then you save the note. And that's notes. If you don't like the note, you can click on it and then delete the note. Now, if I want to print this out and share it via a PDF, I'm going to go to print. And then I can just print the stock comparison guide, or I can append my notes. So let's do that. Let's append the notes. As soon as I hit generate PDF, it will create a PDF and automatically download it to my computer, and it will land wherever your downloads typically land. I click on that, and on my computer, it opens up, the PDF opens up in my browser. On your computer, it might open up in another tool like Adobe Reader. But here's my stock comparison guide with all of the highlighting, the tally counts, the industry averages. One thing about industry averages, if you want them showing up in the PDF, you have to make sure they're selected in the comparison guide. And by what I mean by that is under stock comparison guide, if you have them off, they won't be in your PDF. Turn them on, and then they will show up in your PDF. And then on the second page are your notes, whatever you wrote there. So you can have a nice record. You can save, if this file's already saved, you can email it to whomever you'd like. The other way that you can share a stock comparison guide is clicking on share. And then I'm going to send myself a message. Select your recipients. It's much like the sharing in the stock selection guide. We have a little address book here. I'm going to send it to myself. I'm going to send it to Tommy Bahama. I'm going to send it to Ann Cunias. And then when I've done picking the people I want to send it to, I'm going to click return, and those will all be there. I'm going to say my SCG from 3/20/25 webinar, whatever message you want to write, and then click on share comparison. And in the background, it will be shared. And then what the user sees, we'll see, there we go. I'll drag that over. What the user sees is this nice little message that says, here's a shared stock comparison guide, and it lists all the tickers. And then says, click here to create a copy of the shared comparison and open it in the online stock comparison guide. And when they do that, they will get actually 6 things added to their account. The actual studies are copied into their account, and then the comparison guide itself is copied into their account. So they have totally replicated the stock comparison guide inside their account and can look at it, manipulate it if they want to. Okay. And I think that leads us to the end of all the things we can do with the comparison guide. So Carol, do you have any more questions?
I do have a few.
All right.
We have an eagle-eyed member. He's curious why you picked 54 as the best in the average PE line when there were 2 others with lower PEs.
Oh, nice. Okay. So this is a bit of a counterintuitive item because when the market values your stock, they like it, they're going to reward it with a higher PE. So I am just not comfortable with what on average was a 78 PE over 5 years, but has more recently come down so low to be a 23. So I'm just totally staying away from that. Same thing for Paylocity. And here's where, you know, if we wanted to look into it, let's look at Paylocity and the SG. Look at these PEs, but then they've come down dramatically over the last year. So I decided I wanted to stay away from that company.
I guess, anyway, we won't get into that debate. You can use it how
Right.
you want.
I get
Tom,
to use it how I want to, right?
right. Anyway, another question is there a maximum number of comparison guides that you can actually save?
No, you can save as many as you want.
Okay.
Okay, please
And
do.
I will finish going through. Oh, another good question was, is there a data source for the industry average, and is there a way to find out how many companies are included in that industry average?
Great question. The data source for the industry average comes from the information we have from Morningstar. And I'm going to go off topic here a little bit. And there's two things. There's an FAQ about industry averages that tells you how they're created. And so I'm going to search, and it says how are industry and peer group averages calculated. So industry averages are the weighted average by sales of all the companies in the industry. The weighting, so a company with higher sales is going to have more of a contribution to the industry average, and that comes from Morningstar. These are not the data, the underlying data comes from Morningstar. BetterInvesting calculates the industry average, and we also do not include Canadian companies because of the currency issues. So that's that. And how many companies are in there? I am going to go look at actually the stock ideas page and take a look at the technology industry and say roughly software application. We got 240 companies, roughly. So there's probably some Canadian companies in there. Oh no, US exchanges only. So about 240 companies went into this industry average calculation. Roundabout way, but that's how I do it. Is that helpful?
I think so. I
All
want to
right.
thank Roy Chastain and Marcia Cooey for doing a great job in the back room. We have a few more to catch up on, but I think you can go on.
All right. Excellent. We're going to return to our PowerPoint presentation. And I do want to point out that we talked about the two different views, the SCG Core versus the SCG Plus. There's 25 criteria items in SCG Core and 42 possible in SCG Plus, and that 42 includes the additional bank data if you're studying a bank. They both offer industry averages, and you can save both comparison guides. And let's say you worked completely in SCG Plus, all of those highlighting on those additional rows is saved. And we'll return if you look at that view. Now I want you guys to make a note, it's also in the handouts, of these two classes here, selecting the best using the stock comparison guide which is in Stock Up. And this is Ann Cunez's take on how she uses the SCG. And then in Ticker Talk, there's using the SCG a live demo, and this is Ken Kavula's take on how he uses the stock comparison guide. So it gives you more insight into questions like, why did you highlight this one? How do you think about this criteria? And so forth. That is found in the Video Learning Library under Learning Center and then Video Learning Library. Okay, have you caught up? And so I will also thank our great backroom staff as they do a great job of helping to answer questions as we go through our webinar.
The
Any
only other
other
quick
questions?
thing, the only other quick thing we might want to reference or suggest people look at is the beginner's guidelines. We've had some questions around what are good values, and that's a good reference tool for what those might be for, like what growth rates you would expect for different company sizes, et
Oh,
cetera.
yeah. Great idea. In fact, I will point out that any tool that you use in our tools suite has this blue bar on the left, and the question mark icon is the help icon. And if we click through on that, we can see help separated out by the various tools. And under SCG, there's the basic usage. This is where basically this webinar is going to land, so you can review it later. We also have a quick video on sharing a stock comparison guide online. But under reference materials, we have the SSG guidelines for beginners. That's what Carol was referencing. And this is a great little guideline about set of guidelines about what numbers are good numbers. So there's that. And then there is also a calculation reference. So this is not a black box. This is how we, everything we do is exposed to you if you want to calculate it or by yourself. Every item that we have on here, we tell you how it's calculated. So as you get more into things, sometimes the calculation reference is where we point people.
Okay, I think that does it.
All right.
Thank you so much, Susie, for an insightful session.
Thank you. I'll say thank you to our attendees and glad to have you with us for this presentation. And thanks, Carol. And again, thanks to the backroom staff. So goodbye all.